Ever feel like sometimes when you start getting into the world of finance, it's like everyone's speaking this whole other language?
Yeah.
It's really a lot to take in. And today on the show, we're going to try to crack the code a little bit. We're doing that with Forex.
Right.
And we've got this snapshot of currency strength that I gotta say has got me really curious.
Yeah, it's pretty fascinating stuff. It really is. It's like one of those things you don't realize how interesting it is until you kind of get into it.
Yeah.
It's like peeking behind the curtain at this whole like high stakes game of global economics.
Okay, so now you've really got my attention.
All right.
So let's talk about it. We're calling it a currency strength snapshot. What exactly are we talking about here?
Well, you can kind of think about it like a snapshot, right? Like if you were to take a single frame from a fast-paced movie and it gives you just this little glimpse of how currencies are performing against each other right now at this very moment in time.
So kind of like a sports ranking, if one team's on a hot streak right now, their opponents are probably sweating a little bit.
Exactly. And just like in sports, you really got to understand the playing field, right? Where is everybody playing? So in this case, our field is the Forex market. And specifically, we're looking at data from the London trading session, which even overlaps with Tokyo. So it's a truly global playing field.
Yeah, you said it, global action. So who are the heavy hitters in this currency lineup this time around?
Well, at this moment in time, it looks like the Australian dollar, or AUD, is our winner by a landslide. We're talking a strength score of 73.09.
Wow, 73.09. That's huge. Who's at the other end of the spectrum?
Let's see. At the other end, we have the Japanese yen, or JPY, and it's taken a little bit of a hit at negative 115.07. That's a pretty big difference.
Yeah, that's quite a spread. So what does a gap like that tell us?
Well, for people who are trading, that kind of spread, that's what they dream of. You can kind of predict who is going to be stronger.
Right.
And that signals that there are some potential big moves in the market.
Okay, so we've got our currencies and their scores. How does this play out in the real world?
Well, that's where currency pairs come in. So you never really trade a single currency alone. It's always one against another.
Right, so something like USDJPY or URGBP, right?
You got it. And this is where it gets really interesting.
Okay.
The snapshot gives each pair a plus or a minus score.
Okay.
And you'll hear traders use terms like bullish and bearish when they're talking about this.
Right, I've definitely heard those terms before.
Yeah.
But a little refresher never hurts.
For sure. A bullish pair is one that's expected to go up in value.
Okay.
And then a bearish pair, that's the one that's expected to go down.
Got it. So bullish up, bearish down. Easy enough.
Easy. Yeah.
So when we're looking at these pairs then, what are we seeing?
Or remember, AUD are all-star.
Right, right.
So if you pair that up with JPY, you get AUDJPY.
Yeah.
And it's not really a shocker that one is wildly bullish at 188.16.
Yeah, that makes sense. A really strong currency versus one that's not doing as well. But it can't be that straightforward all the time.
You're right. You're right. It's all relative. So you could have a currency that seems strong on its own.
Right.
But when it's paired up against another really strong currency, it might not look so hot. Like take Euro USD, for example.
Yeah, US. So that's the euro versus the US dollar, right? What's going on there?
Well, the euro is having a bit of a rough go of it. And even paired with the US dollar, which is doing okay.
Right.
USD is bearish. This one's interesting, though, because it's two big economies, right? The Eurozone and the United States. So traders are watching that one really closely.
Right. So even though the US dollar isn't at the very bottom of the list, it's still not doing great against something like the Aussie dollar.
Exactly. And that's why AUDJPY is considered bullish, even though the USD, the US dollar, is generally considered to be a pretty strong currency.
This snapshot highlighted a few other pairs for traders to look at: AUDJPY, EUROASD, and GBPJPY. Why those? What makes those stand out?
It really comes down to how different their strengths are. The bigger the difference is between the two currencies in the pair, the stronger the signal.
So for example, with that AUDJPY pair that has a huge difference of 188.16, that's like a giant flashing sign for those traders.
It's definitely got them talking.
Okay, so we've got these currency pairs like AUDJPY flashing all kinds of buy and sell signals for traders.
Right.
But let's back up for a sec. We've talked about what the snapshot is telling us, the rankings and all those bullish and bearish signals. What about the why? What causes these fluctuations to happen in the first place?
Yeah, that's the million-dollar question, isn't it?
Right. So
Basically, currency strength comes down to how strong a country's economy is.
Yeah.
How attractive it looks to investors all over the world.
Okay, so I'm hearing you say that a really strong economy usually means they're going to have a really strong currency too.
Right.
Makes sense. People want to get in on the action.
It makes perfect sense. When you think about an economy that's really thriving, good GDP growth, low unemployment, healthy trade balances, investors, they notice that, right? They want to be part of it. And what does that mean? They've got to exchange their currency for the currency that's doing well.
And that demand is what pushes that currency's value up.
Exactly.
It's kind of like this self-fulfilling prophecy where success just seems to breed more success.
Exactly. Yeah, you said it. It's really all just supply and demand at the end of the day. But it's not even just what's going on in a country's borders, right? Global events, political stability, all of that can really shake things up in the Forex market.
Yeah. I imagine it's this really delicate balancing act between internal strength and all these external factors.
Absolutely.
Speaking of internal strength, let's talk about the Australian dollar for a minute. It's our winner this time around. What's going on there?
Well, Australia is known for exporting a lot of commodities, and the global demand for those has been through the roof, especially from China.
Right.
So what does that mean? More people need Australian dollars if they want to buy those commodities. That's going to drive up the demand for AUD.
Oh, so it's like this chain reaction. China wants Australian iron ore. They need AUD to buy it. And boom, the Aussie dollar is strong.
Boom. Exactly. There you go.
Okay, so that's the strong side. Now, what about the other end of things? The Japanese yen, we know it's not doing as well. What's going on there?
Yeah, so part of what's going on there has to do with the Bank of Japan. They've been keeping interest rates really low for a while now.
Yeah, I was reading something about that earlier, how low interest rates can make a currency less appealing to investors. Something about return on investment.
You got it. It's all about getting the most bang for your buck, right? So think about it like this.
Right.
Imagine you could put your money in a Japanese bank that's only offering like a 0.1% interest rate, or an Australian bank offering 2%. Which one are you going to pick?
Right. I'm going with the higher return, obviously.
Exactly. So you're going to see a much bigger demand for AUD.
Yeah, that makes total sense when you think about it like that. It's like choosing between a savings account that does nothing and one that actually makes you money. Why wouldn't investors think about it that way?
Exactly. It's a very simple way to think about it, but it really shows how those interest rate differences can change, where investors want to park their money.
Yeah.
And that has a direct impact on those currency valuations.
Wow. This is really starting to make sense now. It's like we're peeling back all these different layers, and there's always something else that's affecting these currency trends.
There's always something else. That's what makes it so fascinating. And honestly, we're really just scratching the surface here. There's so much more to it. Geopolitical stuff going on, even natural disasters. It's all part of this ever-changing puzzle where each piece represents some economic or political force.
It really makes you realize that we're all more interconnected than we think.
We are all connected.
Yeah. What's going on in one country, even if it's something like an economic policy or a natural disaster, that can ripple across the globe and affect the value of our money.
Absolutely. It's true. What's good for one country's economy might not be so great for another. And those dynamics are playing out every single day in the Forex market. So, speaking of that, we've been talking about how a strong economy usually means a strong currency, but is that always a good thing?
Ooh, now that's an interesting question. Are there downsides to having a really strong currency? Because honestly, it sounds kind of nice.
Right. It does, doesn't it?
Like, what could be bad?
Well, it's not all sunshine and rainbows. There are definitely two sides to this coin. A strong currency can be a double-edged sword.
Okay, now I'm really interested. How so?
So on the one hand, it can definitely be a good sign. It shows that your economy is doing well. It also means that things you import from other countries are going to be cheaper.
So like that fancy new tech gadget everybody wants that's made overseas, if our currency's looking good, that can make it way more affordable.
You got it.
I like the sound of that.
Don't you? But, and there's always a but, right? If your currency is super strong, it can also make the things you export more expensive for people in other countries. And that could end up hurting those industries that rely on selling their stuff internationally.
So basically, if that Australian dollar stays strong, all those commodities they're exporting might not look so good anymore because they're going to be too expensive for buyers in other countries.
It's a balancing act. That's exactly it. And policymakers are always trying to walk this tightrope of keeping their currency strong enough to support their own growth, but not so strong that it hurts their competitiveness on the global stage. If it's too strong, exports take a hit. Too weak, then those imports become way more expensive, and then you got to start worrying about inflation.
So there really is no such thing as a free lunch, is there?
That's right. That's economics for you.
There are always trade-offs.
Every action, every decision has some kind of trade-off, and you really have to understand those trade-offs if you're going to navigate all the complexities, the markets, and the global economy.
So we've gone from this currency strength snapshot to like this really deep dive into all these economic forces that make it all tick. But before we get too deep into theory land, let's talk about how all of this affects our listeners out there. Let's be real. Not everybody's glued to the financial news every day, right?
Absolutely. But here's the thing. Even if you're not someone who's actively trading every day,
Right.
understanding how all this currency stuff works, it can actually come in handy in your everyday life.
Okay, now I'm really curious. How so?
Well, let's say you're thinking about taking a trip, going on vacation somewhere. If you know how currencies are performing against your own,
Right.
it can really make a difference in your budget.
Okay, so like if the US dollar is strong, a trip to Europe is going to feel a lot more affordable.
Exactly. You got it. Your money's going to go further so you can really enjoy yourself without breaking the bank.
So it's basically like getting a bonus just for understanding how currencies work.
I love it. What about if I'm not planning on traveling anytime soon? Okay, well, let's say you're more into investing.
Right.
Even if you're mostly focused on stocks here in the US, you're still exposed to a little bit of risk when it comes to currencies.
Really? I've always thought about stocks and currencies as like totally separate things. How are they connected?
Well, think about it. A lot of companies that you see on the US stock exchanges, they're actually doing business all over the world.
Right. That's true.
And that means their earnings are going to be in different currencies,
Right.
which eventually had to get converted back to US dollars when it's time to report their financials.
So a strong dollar could actually change how much those companies are reporting in earnings if they do business overseas.
Exactly. It's a small detail, but it can have a real impact on those investments.
This has been such a fascinating deep dive.
It really has.
We took a look at this currency snapshot and ended up uncovering all these fascinating economic forces, all these global events that are making an impact, and how it all ties back to us,
Yeah,
whether we realize it or not.
it really is. Planning a trip, making investments, it all matters. And it really shows you how interconnected we all are.
It really does.
Yeah, and when you start understanding those connections, that's power. It lets you make smarter choices, whether you're trying to become a Forex trader or you're just trying to plan your next vacation on a budget.
I love that. So we've explored the world of currencies, figured out what makes a move and how it all affects everyone. Amazing.
Absolutely. And don't forget, we just took a quick look at the market. Things change all the time. So the best advice I can give you, keep learning. You never know, you might find an amazing travel deal or your own killer trading strategy, all because you took the time to understand currencies a little better.
That's what we like to hear. If you do, be sure to let us know. Until next time, keep those deep dive requests coming, and we'll be here ready to crack the code on whatever you throw at us.